All right, guys, so here we are at part one of this four-part series on trading with our Renko tool suite. I wanted to just do a quick intro here just for a couple of reasons. Well, number one, I wanted to start here. I'm over here on tradedevils-indicators.com. That link is directly below the video. In fact, every one of these videos, so very easy for you to get over here. Just to remind you that everything you're going to see, all the indicators that I reference, are available to you to trial for 5 full days. That's 5 trading days, not calendar days. And you can just do it right here, right on this. And again, that link is directly underneath the video. But additionally, throughout the course of this series, you're going to hear me refer to individual videos and a few things that I'll speak to somewhat casually as we're going through it. I just wanted to draw your attention to this. If we come over here to products and indicators, all of the indicators that I'm using are available over here for you to dig a little deeper and get some more information. In fact, the majority of these will each have individual videos attached to them. So you'll hear me referencing, our Renko tools here and the Renko bars and some of the key components of the Renko bars and how we decide which size brick to use. The devil's edge, the wicked wave, the initial balance. I'm referring to these throughout. I just remind you here, if you're not completely clear on what's happening in the wicked wave or the devil's edge or any of the Renko tools, you can come over here and dig a little deeper. And as I said, there's an individual video that will take you even deeper into each one of these, what's behind them, how we created them, and then how to apply them. So I just refer you over here because I know I go rather quickly through this, despite the fact that it's about four 20-minute videos. If you want more information, you can get it over here. And as a matter of fact, you can recreate the entire template that I'm using just through your trial. And if you want to see a little bit more, well, you could go to products and you could look at our pro trading packages, and then you'll see the Renko packages over here as well. So I just thought I'd start there just so that you're aware you can try out everything that I'm demonstrating in this little series here free to you for 5 days. All right, so that's one possibility for you. Now, the other is, for some of you might be familiar with trading Renko. There's four videos in the series. The first one is more kind of what makes the trade work, how we set it up, what's behind it. So the first one would be important. The second one and the third one, those are me applying it into very current market. So I recorded the first 3 on Thursday the 29th, and then the fourth one was recorded on Saturday morning, which is when I'm recording this. And that's just the trade results applying this exact same trade to the markets on Friday morning. So that'll give you a little taste of what I'm teaching theoretically and through examples. And just so you don't think that it's all hindsight trading, I only had about an hour and 10 minutes to trade on Friday, but I got in about 21 trades there. So that should give you some idea of what I'm teaching applied in the market. You can see it happening as it unfolds. All right. So with that, some of you, there will be some repetition here that may be something you're already familiar with. Those of you that are brand new to trading with Renko or just kind of exploring it, I would encourage you to go through all 4 of the videos. If you get the gist of it after 2, you could probably go through 3 at time and a half, just save yourself a little time. But I think there's value in each one of these. I broke them up just so that it wasn't so, just one very long video here, so you can take a break, come back, follow on. Watch one a second time if you need to. So with that, I'll just stop talking here and we'll start the video. All right, hey traders, Sam here from tradedevils.com and tradedevils-indicators.com. Now today I wanted to do a relatively, what I hope will be a short video here, well, short for me. And I'm going to combine 2 things. Just a brief bit of training here so that you understand conceptually what's going on in this particular trade. And then we'll look at a full template, and you'll look at this in just current examples in the market. Now, I'm recording this on Thursday, July 29th, 3 o'clock New York time, 2 o'clock for me here in Austin. So markets are still open, but I don't want to get distracted by what's happening over here on the hard right edge. But I want to go over this conceptually, and then we will apply it to the very current market action. And it's just, this is a particularly good couple of days here to demonstrate this. Not that there's ever any need to cherry pick, because it happens all day long, every day across all markets, but this has been particularly good, and I can just use the most current examples here rather than go back and try and cherry pick examples for you, which I never do. There's never any need to. So I have in front of us here, this is the September YM. I've got a 7.2. This is our mean Renko bar. This is the TDU Renko bar. Nothing fancy here about what we're doing with a mean Renko bar, but there are a couple of things that I will point out here. One, you'll notice right off the bat that the wicks really stand out because I have them fattened up and I want them in bright white. And the reason I'm using a 7.2 because I have here our Renko brick size calculator, which is part of our Renko suite, and that's a very important part of this entire solution here. So we will return back to this, but you'll see here that across 3 different time frames, it's recommending a 7.2 for me, which would be an approximation of the 1 minute chart. Okay, so one of the let me just back off here for a little bit, just a quick, just conceptually, just go over a couple of things. The first thing which is important is that I want you to think about the market is nothing more than a series of 3 swings. So, well, whether you want to call it A, B, C, or 1, 2, 3, 4, however you want to think of it. It's just I always think of it in the context of a swing, a retracement, and then another swing that either goes external here, or it would go external by breaking this pivot, right? So it's always just internal that goes external. Now, as we sit if we're right here and we're making an internal retracement, we don't know. Well, let's do it this way. We don't know if it's going to break that way or this way, right? So you don't know. Now you can. Of course, we can look at market structure and say, are we in a trend here? Do we have a series of higher highs and higher lows? Is that what's going on here? So you could reasonably deduce if we're in that trend and I've had a continuing series of higher highs and higher lows that you might anticipate that continues. Okay, maybe. And then the other thought is if you were to break the low here and you went external by breaking this low, as you've heard me say this before, most often, unless you're at an all-time high, that will be connected to something above, right? So let's get that off of there. So if it breaks down here, look left, and very often you'll find that it will just be part of another 2-legged swing or ABC, again, however you want to phrase it or think of it. Okay, so let me back that off. Now, one of the reasons that I so very much like trading with Renko bars is because it takes that 3-legged structure and it makes it incredibly easy for you to spot. Now, I have a couple of things on here just to let you be aware here. So I've got our initial balance indicator here, just framing the day here, the first 60 minutes of the day. Very important. I would tell you, in addition to VWAP, those are the 2 most important numbers that you must have on your chart if you're a day trader. Period. If you're not going to use our indicator, do them yourself, get somebody else's. Those are essential to know where they are, right? Okay, so not to digress into that, I've done several videos on that. Okay, so but as you can see this throughout the course of the day, and see if I scrunch this up a little bit, here you can now see the entire day here. So here's the open up to our IB high. IB low is established. Oh, yeah, well, it ends up being here, but we don't. It's not officially confirmed until we get to 10:30. So at this point in time, we've only had 1 test of the IB high, which was right here. Right, so that's the first test of the IB high. If you're not familiar with what happens about 85 to 90% of the time, you need to go back and watch my initial balance indicator as to why that would not be an area to be buying. Okay, so that said, again, I don't want to digress into too much here because I could go for hours on this. Additionally, down here I have the up-down volume, which I have on here just because Renko does such a nice job of showcasing where the volume comes in. Because there's no time component built into the way Renko bricks are formed, the high volume really stands out. So we can see, here we'll just make an easy example here. Let's get my arrow here. So we've got this move that's gone up here, and in the course of that, we see there was some good up volume, and this is why I like to emphasize the wicks here. To create the wick and for this trend to be interrupted by what right, so here it is right here in your face, to be interrupted to create the downturn here, or the retracement that creates that pattern that I was just talking about you focusing on. There's your 3-legged swing. Well, for this top to happen, Well, something has to happen there, right? Some substantial amount of sell volume has to come in. Well, look here, right? If I just look, I think that's the highest volume of the sell volume of in the entire day. So I know, looking at that this little bit, I might wick it off here if I was in, if I was on the hard right edge, I would have wicked that off as, hey, well, this is potentially some resistance because look at all that volume. Again, not to digress too far into that, but that's why I want to emphasize the wicks, and then that's why I like Renko, because I can really see. Same thing happens up here, right? You see up. Come here. You see up here where I have this pivot here. Well, look at the sell volume, right? So it stands out. Again, this is one of the advantages of trading with Renko, and I get the same thing here, right? You see during this move here, big pumps of volume that drove it up here, but something changed up here. It's reflected right there. All right. So you get context, so you don't get caught into, well, how much volume was there? If you look at it on just a minute chart or a tick chart, they all are very, very close. Occasionally one stands out. Here, the big bars really stand out, right? So it draws your eye to it, and you'll find on almost every one of these pivots, here you see it again, right? Same thing, same thing, same thing. On every one of these pivots, you see that volume come in. All right, I'm digressing, even though I'm trying not to. All right, so let's back up here. So again, back to this idea of everything being thought of as a 3. Now you're going to look at something like this, and you're going to say, well, hey Sam, wait a minute there. That looks like a whole lot more than 3. Well, you're absolutely right. It's the same thing on the way up. But you want to look at these as a series of 3s, right? So this here to here, there's one 3. Oh, get off of there. There's 1 3 right there. Okay, so there's 1. Well, now you could look at that, okay, as one of the 3s. Well, then again, I would encourage you to try and think like this. Well, within that, then I get another 3. Gotta get you off of there, right? So then I get another 3 right here. So I had the first one, then I get another one, then yet another one. So if you start to think of these in the context of just a series of 3s, and this will make sense to you as to why I'm talking you through what seems quite obvious. But then additionally, you could also look at it this way, right? You might do it in the context of perhaps larger degrees, right? So there's a 3 there as well, right? It's just a constant series of 3s. And Renko bars make that so it's drop dead simple, like you almost can't miss it. Now, how about something like this? Well, okay, so I mean, you could think of the same thing here. I mean, essentially what you have there is another 3. Right, and then here, geez, I'm not good with getting that off my mouse. But then here, this little baby 3 is going in right now as we're winding down into towards the end of the day. It's just again a constant series of 3s. But I would also draw your attention to something like this, because this is ultimately where we're going. Oh, I could use this one here. So I've got this here, and I get a little retracement. So I've got a little inside 3 there. Right, now that's important. Now look what happened here. If I draw this, let's see. Here, I'll just use the crosshair. All right, so look at this bar here. So this bar here, I've got high volume. Then I get a high volume sell bar here, but it only gives me 1 bar. I only drop that far. So this is the highest amount of volume over the last 5 bars here. I get this increase in sell volume here, but the market doesn't move. And then I get a big, right, what creates this wick? That sell volume. What creates this wick? That buy volume. So I can look at that, and here at the time, it's already past it. So at the time, here I'll do it this way. I would have drawn out this as the potential support, right? So what the wicks are doing for you here. Let me take this off. What the wicks are doing for you in real time is giving you supply and demand, right? And it's always reflected down below in the volume. But wherever I see a wick, I know something happened, because for the Renko bricks to break down in that sequence, there has to be something to turn it around. Otherwise, I just get another green brick. Right? Look what turns it around. Right? It's always right. So it's real time supply and demand, support and resistance, however you want to think of it, as the market's unfolding. Right? Very, very useful. So if I were just looking at this here right now, so I would say, okay, well, where's the resistance? I might say, okay, well, there's some. I got to pay attention to that. There's that one. I got to pay attention to that, and there's that one. Market creates these. I'm not guessing about where support and demand are, where supply and demand are, support and resistance, I should say. I'm not guessing about where that is. Right? The market is showing me in real time. All right, let me pull those off. Okay, so if you stay with me in that line of thinking here, here's another. Again, I'm just going to emphasize this because you need to get clear on this. Right? So there's another 3. right? Followed by yet another 3. Right, again, it's much easier to spot this in Renko, right? There they are, right? But then you could think of the entire thing in the context of just a larger 3, right? So I want you to start thinking and getting your eye tuned in to 3s, nothing but 3s, right? As a day trader. Now, again, you guys perhaps know me as an Elliottician, where you can say, oh, hey, I got 1, 2, 3, 4, 5. I got 5s and 3s. Very true, but we're not applying Elliott Wave here to these Renko charts. Now, there are times where a 5 and a 3 is going to just scream at you, and if you've done any Elliott Wave trading or training, your eye's going to spot that, right? I can't not see 5s and 3s. But when I'm day trading, I'm only looking for 3s. I don't care if it's going up. I don't care if it's a drop-dead perfect impulse. I'm just because any impulse is always made up of 3s anyway, right? So if we just think of an Elliott Wave impulse like that, right? So there's a classic. Well, here's a 3. Here's a 3. I mean, you can break it down into a, you could say this is a 3, right? That's a 3. So I'm emphasizing that because it will help you, right? I don't waste my time here for things that are not going to help you. So 3s only. That's all I want you to see. And then in the context of this Renko brick, I want you to appreciate 2 things. One, how easy it is to spot the 3s, and then notice the volume. Always at the wicks. The wicks are real-time supply and demand, support and resistance. Okay, having established all of that, now, and I think having that clarity in terms of what we're looking for here. Now, I'm going to go to 3 different markets here, and I'm just going to use today's price action, right? Just, again, never cherry pick, no need to. All right, so let me bring down, since we're here with the YM. So let me bring down here's the YM with the full Renko template. Now, of course, I have a lot on here, right? Now, I'm in a unique position, right? I can put as much as I want on here because we designed all of these tools. And some of you may have our Renko package. Some of you may be considering it. Some of you may well have demoed some of our products. Of course, as you may or may not be aware, if you've been to our site, you know this. All of our tools, every indicator we make is available for a free 5-day demo trial. Right, it's a full working version, and I should emphasize that's 5 trading days, not calendar days. So 5 trading days. You can use any of these indicators. You can recreate this entire template just as I have it via the demo. All right, so I'm not going to go over absolutely everything that I have in here, but I just want to focus on what's happening between the price action as reflected by these Renko bricks. And we're going to focus on the I call them my power trio. Oh, members will know that I often refer to them as my dumbass filters because I designed them and color-coded them to keep me from doing something dumb, as in what color are the filters, right? Are they red or are they green, right? So if you were thinking about buying here, for example, let's say you thought this was a swing and this was a retracement, and you thought, oh, we're going up to challenge the highs. Oh, there's my 3. Well, I want you to look below, right? Look below what are the here. Oh, that's what I was trying to do. What are the dumbass filters saying? Right, so this is the devil's edge, the wicked wave, and the devil's pitch. So look below. Is there anything here that says be a buyer? Even as something as simple as the color, right? What color is the devil's pitch? Red. What color is the wicked wave? Red. Are we below or above 0? We're below. What color is the devil's edge? What color is the center line? Right? These are all tools in here, right? Even the moving averages and the trailing stop. Everything is here is red. So why on earth would you be thinking about buying there? Dumbass, right? And that's me talking to me. That's why I had to design these, and I affectionately call them my dumbass filters. But there's a lot of coding that's gone in here to create what are very souped up versions of more traditional indicators. And some of you that have watched some of our training know that this is a very high-end turbocharged MACD. This is a turbocharged RSI, and this is a turbocharged Well, you could use this for a number of different tools. I use it with volume indicators. Anything where the relative pitch of the indicator adds value, that's thus the devil's pitch. I run the OBV. So I've got momentum indicators, 2 different types of momentum indicators, and then I have a volume indicator and then price action as well. Okay, so I've got volume profile here and measured moves and other things on here, but what we're going to focus on today is the power trio down here, or the dumbass filters, as it relates to the price action. So I want to go back. Let's do. It's good God. There's so many today. Here, let me see if I want to go back any earlier. Find you a couple of wins and a couple of losers here. Oh, okay. Let me go back here. Where's the? Well, we can start. Let's get the whole day framed here. Okay, so here's the open is what I'm after. Okay. So I'm going to show it to you right off the bat. Now, members will have seen this because I hammer this into them every single day, right? This is the trade you're looking for. So I post these all day long. I've been through live streams, webinars. This is something I'm constantly making sure that members that are trading with Renko bricks recognize. And you as YouTube subs and potentially owners of some of these tools, I want to just show you this trade because this will help you, right? I go so far as to say this is going to make you money. I think it depends on the individual trader, but I can tell you this is a very high probability setup, and I'm going to just walk you through 3 totally different markets to demonstrate that this happens all day long in every market. Now, one of the trade-offs with this is because you're waiting for this particular setup, you're going to miss some trades, right? That's just reality of trading. There is no setup that's going to get you into every trade, but this is going to keep you on the right side of the market and the right side of the momentum. So let's go over it here. In order to do this, I'm going to pop these up here. I'm going to de-emphasize the price action here just to emphasize what's happening with the indicators. Now, the pitch is relatively straightforward, right? So remember what I'm running through the devil's pitch here to give me these colors, and the slope is the on balance volume, right? So I get an indication of volume. Now, additionally, you'll note down here I have the up down volume as well, so I can see at those pivots. I want to see those high volume bars, right? I want to see them. So here, what I want you to see here is what happens between the devil's edge and the wicked wave. Okay, so this is a kind of a volatility measure. So right now you could look at, so if you were, I wish I could go right to this moment in time, but if you were right here at the market, here's the open of the market. All right, so you're right here, and the first thing that happens coming out of the chute, this is pre-market here, we go into the market, we go straight up. Now, look at so of course, as we're going straight up, as no surprise, momentum indicators are going to go with it as well as volume, right? So here's the big spike of volume that's connected to this bar right here. Up we go, right? So you see here, the devil's edge pops outside, right? This is a standard deviation here. So we pop outside of 2 standard deviations of the MACD line, and we pop across, we get those green dots. So we can look at this and say, hey, well, if you were just taking the breakout here, here's the arrow that fires when the devil's edge pops outside of the Bollinger Bands. Hey, there's a nice little trade right there. Well, that's true. Okay, but what I want you to notice here is that, well, okay, before we happens with an improv. Let me go over to the right edge here, and I'm just got to go through this conceptually. Oh, hang on, I'm going to go back to my other chart here. Let me take that up. Here, I probably should focus on this. But and now as we take it to the charts, I want you to recognize this. All right, so in an uptrend like that, right, if the market retraces here, and now you're, at this point, let's say it's, let me get that off here. So you got a swing and an internal retracement. Now, at this point in time, you don't know if it's going to break this low or if it's going to break that low. All you know is you've got a swing and you've started retracing. Does it stop here? Does it stop here? Does it stop down here? Or are we going to get a pivot and then break this high and get that traditional pattern? Well, the challenge that you have to deal with, and every retracement trader has to deal with this, and what we've done here is try and give you a solution to this. So as you're sitting here, and if you've seen any of my trading, you know that there's an algorithm that sits right here between the 50 and the the golden zone here that's very active here, right? So if you ever see a retracement like this, there will be an algorithm that will kick in here between the 50 and the 618, and we'll have that as its target. And there's your, if it hits that target, there's your classic measured move, right? Now this is a slightly modified version of a measured move from the traditional A to B equals C to D. Lots of training on that if you're unfamiliar with this, but this is the way the algorithms operate. So there's an algorithm that absolutely will. It doesn't matter if this is a 1 minute or a 30-second chart or a 30-day chart. It doesn't matter if we look at them weekly, monthly. If there's a swing and a retracement and the market gets between the 50 and the golden zone, an algorithm is going to kick in here and start buying. Right? That's, I like to think we don't have to discuss that. Right? Again, I've got probably 2,000 videos demonstrating that. Okay, so I'm just going to assume that you're with me on that. Okay, so we've got indicators that do nothing but identify those. So here's where the algorithm is kicking in, right? Well, here's the bad news for the trader going, oh shit, well that looks pretty easy. If I know an algorithm is going to kick in, they've got a target up there. What's the problem? Why don't I just buy every time I get there? Well, you could do that, except bad news is, in the reality of trading, is that there's another algorithm on the other side, right? And just as there's an algorithm that will kick in every single time the market gets between a 50 and a golden zone, it will do the exact same thing coming up. So there will be an algorithm sitting there that will start selling, that will have, now you can't see it right there, but there's the green line here. So the same target will be here relative to where it's going to start selling, and then there'll be another algorithm that's here looking for that target, right? So how do you know? If you were a buyer here and the market starts coming up, you got two choices here. One, you could wait for it to break the golden zone. So that's not unreasonable, except the difficulty with that and what's inherently problematic with that, with waiting for that. All right, I'll push this off to the side. With waiting for that to break, is that the way the market moves, it's unusual unless there's a news event or something that's causing major increases in volatility, and the size of the swings are getting much bigger, and the buy programs are just open full throttle. Unless there's something driving it. Oh God, I've got those going off. Let me turn that down. Okay, unless I've got news that's driving this to where I can anticipate larger swings because of that very fundamental news that's driving the market. Maybe it's look at this week, right, with the Fed speaking, right? There's an anticipation here that the swings could get bigger. So unless there is something bigger, you don't know at that moment in time who's going to win that. Now you could say, oh well, okay, series of higher highs, higher lows, maybe that will influence it. Unfortunately, we don't know who's going to win there. So this becomes the ongoing problem. And as I said, you could wait for it to break, except just the reality of trading is, if the market moves that far and it's gone all the way through, it's broken the 50, then broken the golden zone, if you wait to buy it right there, often, just as a result of the way the market moves, it's gone far enough that the people that catch this ride are going to start to take some profit. So you waited for it to break the golden zone. And believe me, I've tested this. You waited for it to break the golden zone, and you buy it on the break of the golden zone thinking, oh, now we're going to go straight, and often it'll just do that. Because it's gone far enough to where the temptation for those that caught this run, and they might have caught it in, a 200 lot, that's enough. That's enough, right? Some of the algorithms, they'll trade for 2 ticks, right? So, but they'll do it in massive size here. So if we're going to go that far in the market, it's likely there's going to be some profit taking. And so you waited for it to clear the golden zone, you enter the market, and the first thing that happens is you're underwater. Now you don't know. So now you're going, oh shit, what do I do now? See, oh, maybe there's an algorithm up here at the 786, 764, and that's going to drive it down to this. Uh-oh, what do I do now? Or you might think, oh, I'm underwater, but maybe another little algorithm is going to kick in here. Oh, let's see if I can do it this way. So another one will kick in here, and it's going to start buying at the 50, and with that, I can get this to go. But here's my target right here. So the small one's got a little target right here. The big one's got a target right here. So is this going to go up all the way there? Well, remember the market again, unless there's when you're down here at this kind of level where we're approximating a 1-minute chart, market rarely moves in one direction without, right? More typically, you guys have seen this, right? It'll do this, right? It'll be all over the place. It'll be all over the place on the way to get there. So it doesn't go in a straight line. Again, now it's often you'll see news drive it, and it will go in a straight line. But there has to be something driving that, so the size of the swings increase. As day traders down here on this low time frame, we're constantly dealing with this challenge: which side wins? Which side wins? And there's really no way for you to objectively deduce that. We're just looking at price action, and you could try and do it through price action. You could try and do it through candle patterns, but I'm telling you, I'm going to show you a better way to deal with it. Now, hopefully you understand that. If not, rewind the video and just go through this again so that you understand, because this conceptually is what's behind this entire trade that I'm about to show you. Okay, so how do we deal with that with our tool sets where we're using momentum and a variety of different tools to help us decipher who's likely to win that battle? All right, let me get my chart back here. Okay, so let's go back to where we were, and I'll show you how we've solved that. And it makes this trade very easy to take.